Is this a tradable bottom for stocks? Let's find out. It's Sunday night charts, and we're going to start out with the S&P 500. We'll take a look at its breadth. The percentage of S&P 500 stocks above their 50-day moving average is just under 37%. And whenever you've seen that, this as being a -2 standard deviation event, that you'll notice that it has been a short-term bottom and offered some upside potential each time. And so if you're wondering why we're starting to see money flow in, well, this is one indicator. But let's take a look at the percentage of S&P 500 stocks above their 200-day moving average, and that's now below 50%, and that's a -3 standard deviation event on a one-year chart. So is that a massive major buying opportunity for you? Well, we need to put this in historical perspective because we have no other data points to look at. So let's go to the historical percentage of S&P 500 stocks above their 200-day moving average, and I've circled here where we're at this, just sub 50% level. And you'll notice there was a spot here in just in 2014. We see around 2005, 2006. And back in 1994, and these were all actual potential bottoms that actually led to more upside. And you can kind of see, just looking straight up, that these were opportunities suggesting that, yeah, this is a potential bottom, at least based on breadth. Now let's continue on and look at the relative strength indicator, or the RSI, on a one-year chart. And what is it telling you? That the S&P 500 is oversold, and there are other times we can go look at is when the RSI gets down into the 30s, or in this case we see a little higher, that has been indeed a bottom, signifying that the S&P is oversold. Let's keep going and look at the MACD, which is a moving average crossover, looking at a shorter term moving average crossing over a bit longer moving average, and it's showing signs of a bottom. Now a lot of people will wait until it does cross over, and you can kind of see coming back to October where the crossover occurred. So even if you missed the exact bottom, which of course is impossible to do unless you're lucky, you'll notice that it wasn't until the MACD crossed over that you had a nice entry point and you knew the bottom was in. You can see it back here in March. And so the MACD is telling you, hey, you're not there yet for an entry point, but a lot of other indicators are saying yes. In fact, even Momentum Timer Pro on the daily single isn't there yet, but probably is soon. So it's like the MACD, it's not trying to get the exact bottom, but I bet this signal will switch pretty soon. And if you're not signed up for MTP, you should. I'll put a link up above, and there's one in the description below. It's free right now, and subscribers, when it goes paid, will get a discounted price. So let's take a look at the longer term momentum indicators. We'll notice that still all the moving average are bearish on price and momentum, nothing really changing there. It's below a lot of the key moving averages, which is a problem at this point, but you'll notice it's popping up above the 9-day, and that's kind of giving a little validation to the MACD starting to turn. We know it's still below its 1 and 3 month indicators, but on the longer term, it remains above the 6, 9, and 12, and a lot of momentum algorithms are trading around the 6-month window. So this being positive means they're not yet selling. So let's take a look at the charts and see, when we apply a little volume price analysis to this, what we have is that clearly sellers on SPY were up here at 468 in this sell zone, as indicated by these two purple lines, and down here below is a buy zone, and you'll notice it got a little below that, and we said that, hey, that could possibly happen. In fact, if we go out to a one-year chart, where do you see all this volume occur? Right where people are buying now, and right where they bought back in late September, early October. So there's some early indicator right now that there are some big players coming in and buying, which we've talked about on the weekly show, that yes, there are people buying here. Now if we zoom in to see if this bottom was being bought, go to the 10-day volume profile, and there you go. So at this point, if you're looking to make, say, a swing trade or a short-term trade into the S&P 500, the only two things you're waiting on is Momentum Timer Pro to validate it, and you're waiting on the MACD to cross over. Now, will those happen right away? Maybe not, but otherwise you've got a lot of other signals saying, yeah, this is looking like a potential bottom. Now, what is the negative to this is it's in a sell zone. Remember, this was up here was a sell zone, and below that down here was a buy zone, and this right zone here. So normally you have a sell zone and a buy zone, but this zone has been sold, and you'll notice that the 200-day moving average is acting as resistance at the moment. So you might want to wait and see if this crosses the 200-day, maybe wait for the MACD, maybe see if Momentum Time Pro catches this bottom. It's looking like some of these other signals are going to be delayed, but the hope that traders are looking for here is a move back to the all-time highs or near the all-time highs where the 6-month volume profile is sitting at. So that's what the market's looking for. Well, we'll see if it actually happens. All right, let's go on to the Nasdaq 100 or QQQ and see what it's got on its breadth indicator. What do we see? The percentage of Nasdaq stocks above their 50-day moving average is at 18%. So on the this breadth indicator is a huge, would say it's a just screamingly huge buying opportunity. You'll notice there's 1, 2, 3 events where this happened, and all 3 of them indicated buying opportunity. So based on this one indicator, this is a good sign. Let's go to the percentage of Nasdaq stocks above their 200-day moving average, which is 33%. It's kind of off the charts, just like the S&P on a 1-year chart below a 3 standard deviation event. Again, screaming potentially buy. Well, let's take a look at the historical chart and see how often this happens and if it's a buying opportunity. And sure enough, it has been. You go back here to 2015, 2016, that turned out to be a buying opportunity. Let's look around here in late 2011. That was. How about just after 2008? There was a short-term move there before it got ugly. And just around 2001, there was a short-term move. So from a breadth perspective, it's saying, yeah, there's opportunity here for sure. How about we look at the relative strength indicator, and just like the S&P 500 is saying, yeah, the Nasdaq's oversold. When it gets down into this 30 range, that signals a buying opportunity as it moves up. And you can see, again, looking back to October, it got down to this level before relative strength rose, as did the Nasdaq, suggesting now that yes, the RSI is saying this is a short-term bottom. How about the MACD? Just like the S&P 500, the moving averages are not crossing over yet. The slower indicator hasn't gotten up there, but the MACD, as those of you who trade it know, it's a lagging indicator. That is one of the reasons you like it, because you're not shooting for the bottom. You're not trying to jump on it. You want the bottom to be in, and you can see, again, back here following October, there was the bottom. The MACD crossover occurred. Coming back here in May, same event, and even in March. So if you're trading the MACD, you're getting ready, and so you're starting to look at your other signals and saying, yeah, check those all off. And even Momentum Time Pro still not there yet. It's kind of like the MACD. It's a little bit slower. It's not trying to catch the exact bottom, but it's again suggesting that after 16 days of continuous selling, under its signal points, that yes, it's getting ready to jump in as well. So keep an eye on MTP and the MACD for your entry points. Let's look at the longer term signals. Again, on the moving averages, 21 price and momentum are bearish on the 2150 and 100 day. It's below all the key moving averages. So not as much optimism, say, as the S&P, giving a few more signals. I mean, again, above the 9-day isn't a big deal, but on looking at the S&P, it was just one more indicator. And you see the 6-month momentum is negative. Again, a lot of algorithms that are trading around that they could start selling their longs or entering short positions based on that. So we're not seeing quite the conviction on the QQQ, but let's take a look at the chart and see what we see on it. Let's go right to here, and we're on the 6-month chart, so you can see this selling pressure is down at a lower level. Remember, the sell zone was clearly up here, and that's come down as traders came in to buy right below the 100-day moving average here in blue, and they just got sold and slammed through. This would have been a buy zone, should have been a buy zone, slammed through that into another zone down here. So here's your buy zone, is way down here, going back almost a year ago. And so it's very clear that what traders are going to try to do here is drive this up to the 200-day moving average. And you'll notice there on the 1-year chart, that's where the big seller volume is at. So you now know this was a sell zone. This should have been a buy zone. Turned out to be, flush all those people out. And here's your buy zone right down here. So let's zoom into the 10-day window and see if that was indeed being bought. So again, you've got a number of indicators that are suggesting here this is indeed a short-term bottom. You don't have have all the full conviction of, say, MACD and MTP, but both of those are, you know, a bit lagging indicators compared to some of these. But you have a lot of validation that this is indeed a potential bottom. And where would you look to this run to? Oh, you're going to look for it to run back to the 200-day moving average, right, to find out if this zone here that was sellers can get back and find some buyers there, or if indeed there are more sellers there. Let's go on to the Russell 2000, which is probably the ugliest of the three. Oh, whoops, I forgot to put the Russell in. We'll go to TLT instead. We'll look at the bond market here. And what do we see with 20-year iShares 20-year Treasury TLT is we see on the RSI that it kind of came down to a bottom, got right near 30. And last time, of course, in October it did that. It went on to rally. And then you can see back here in May, price went on to rally. And then you'll notice that back in late February and early March, it got down here. Price didn't bottom yet, which is why you can't just trade on the RSI alone. And then it got some strength. The RSI was just telling you, hey, it's oversold. And it was just oversold for a while until the RSI started to turn. Let's take a look at the MACD. And here you can see it's just crossing over. It's just started to cross over now. And you'll notice that the previous times it's crossed over, those have all been buying opportunities for TLT. And that's a good signal here, suggesting that bond prices are going to rise, which is bad news for the equity market. And even Momentum Timer Pro is not quite there, but I have a hunch that it should be triggering the next couple of days. So if you sign up, you'll get your first report on Monday morning before market opens. Let's take a look at the longer term signals. Price on all the moving averages remains bearish. Momentum on the 50-day and 100-day are positive, though, suggesting that it's starting to pick up some steam. It's popped up just above or right at its 21-day moving average. And we can see the 6-month momentum, which again is typically one that gets heavily sold by algorithms, is fighting back and pushing up. And that is a good sign for the bond market, but again, a bad sign for the equity market, suggesting that financial conditions are indeed tightening, which perhaps is why you're seeing some equity weakness here. So what do we have on this chart? Price came down. The 6-month volume profile said there's a huge amount of sellers up here, and they did. We know computer algorithms, CTA, sold right in this mark here. We have data on that. It came down. Everybody thought this thing was falling off the edge of a cliff, and all it did was confirm the supply zone down here. And that's what's important by adding these supply zones to your charts and not just going on technical indicators, is it adds a lot of color to the big picture. And you see all this volume down here. Buyers came in right where they were before, said, yeah, I'm a buyer here. And they said, yep, we're a buyer here again. And now you see it's fighting its 21-day moving average, looking like a bottom here. So let's look at the 10-day volume profile. It's sitting right at its 10-day mark, suggesting, again, everything below here has been bought, which makes sense so far. If we go to the 30-day volume profile, it is validating that indeed this is a bottom. Everything down here is being bought. And where does that suggest the price for TLT is likely to head? Well, the first destination has got to get through its 200-day moving average, which hasn't been a big issue for it. But if we're looking at the volume, you're looking at a move to 146.76. And then potentially to find out if the sellers are still there at 149.11 at the 6-month profile line, where they've been pretty aggressive. But remember, these CTAs were selling here. If price gets enough momentum behind it, they will start to cover their shorts, and they are indeed deeply short in their positions. So with that, we'll wrap up the equity portion of the show, and then we'll see you back soon for the gold and gold miners and dollar portion of the show. Thanks for watching. Bye now. The content of this video is provided as educational information. It's not intended to provide investment or advice. It is not to be construed as recognition or solicitation, buyer selling security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre. Personal capacity opinions expressed in this video that do not affect the evaluation of advising or Steven Van Metre Financial.